first tech company we looked at, Infosys. With HDFC, the financial statements will be slightly different as they won't have the same terms included. So let's look at HDFC next. Let's look at HDFC Bank. So because banks have the different, okay, again the overall stock price part will be generally same. We have the opening, the closing price, the lowest, and the here we have the volume weighted average, the turnover in lakhs, crores. We have the market capitalization, face value, earnings per share, which is very good for HDFC company. Again, HDFC Bank is also a group A company and it's also part of the BSE Sensex. We're looking mostly at the Sensex or the index companies because they perform generally quite well, and you can always invest in these companies for long term. Next, let's look at the screener for HDFC. So in Infosys we had sales, expenses, and operating profit. In HDFC Bank these will change specifically. So we have the overall view of the company, a screenshot, and their competitors: HDFC, Kotak Mahindra Bank, ICICI Bank, Axis Bank, IndusInd Bank, Bandhan Bank, and IDFC First Bank. And here we have the quarterly results of the company. These were the past 3 quarters of the company which have been quarterly results of the company which have been announced. There must have been a financial change in the structure of the accounting because it's not showing past these 3. So let's look at the yearly difference. So when we looked at Infosys, we had sales and operating profit and such in the profit and loss statement. So in banks they have revenue, interest, and expenses. So the financial statement will be slightly different, but it's just the terms which are different because they have different sources of income compared to Infosys. Infosys gives services like computer services and human like people services. In banks they generally finance the funding, they fund other companies, they give loans a lot, so their revenue generation model is slightly different. So they have phrases like revenue, interest, and financial profit in comparison to the sales and expenses which are generally in the other companies. So this difference you can always see in other companies compared to financial companies. So here we look at the financing profit of the company. So we have the financial results also announced for HDFC Bank. So the company has definitely been performing increasingly well. There was a sudden drop here around 11 years ago, but for the past 10 years the company has definitely been in an upward movement. So we can see just in the past 2 years it's increased a lot. We have profit after tax, that's also increasing. Net profit, as we can see, this sudden drop here in the financing profit did not affect the net profit bottom line. And then this is definitely a good company. As we can see, over the past 12 years it has had increasing returns. So dividend payout is also very consistent over the past few years. The earnings per share is also quite good. Let's look at the share price of the company. It is at 2,226 rupees with the dividend payout being at 18%. It's 18 to 19%, which is definitely very good. Even Infosys didn't have that. So HDFC Bank is definitely performing quite well in comparison. Here then we also have compounded sales growth of the company. In 10 years it gives an average of 20.48% average in sales growth. In 5 years 19.83, 3 years it's 18.52, in the trailing 12 months it's 23.3. So this shows that it's at least consistently over 18%, which is very good for sales growth. In profit growth, we have 25% in past 10 years. In 5 years, it's 20.63%. So in the past 10 years, there's the profit margin growth. The growth margin has slightly dropped from 25 to 20%, but this is definitely good as it's consistent in the past 5 years, 20, 20, 20. This is very good. Return on equity is again from 16 to 18%. There's been a sudden drop in the past 1 year, which has affected the return on equity percentage here. So that's why the general advice given to long-term investors is to invest in index stocks. As you can see, when they are considering to add a stock into the index itself, they generally pick stocks which perform quite well and move the market. So you can always look at practice your researching skills on index stocks, then move on to other companies. After the index stocks, you can always look at all the other group A stocks, because these are the large cap stocks, companies which have huge market capitalization. And you can always, or generally the blue chip stocks are also group A stocks. You can have a look at it. So let's look at the return on equity. The financial ratios, it's consistent, at least at averaging at 17% overall. It hasn't gone below 17%, so that's definitely good. You can access the annual reports, the credit ratings of the company, the recent announcement whether they are keeping up with the regulatory industry compliances, and you can compare it with other companies. So even in the peer-to-peer comparison, we have market capitalization, the dividend yield, the net profit in the last quarter. As you can see, in comparison, HDFC has performed the best in comparison to all of its competitors. In the quarterly profit growth, there's a slight change here as this is not in percentage value properly. Then in sales quarter growth, we can see again HDFC Bank has performed better than all of the other companies except for IndusInd Bank, but IndusInd Bank just went through a merger recently, so you should take that into account. Return on capital employed is 7.69%, which is definitely good. So in screener itself, they have the pros and cons of the company. The company has good consistent profit growth of 20.63%, as we have already seen. It's maintaining a healthy dividend payout of 18%, again very good. The cons, so here are the negatives of investing in the company. So the stock is trading 3.97 times its book value, so the company's stock is very overvalued. So you can wait for the stock to fall a little bit and then invest, or you can always go for the dollar averaging or the rupee averaging strategy, which is you invest a little bit in it every month or in a periodic time frame, so that little by little when you average it, it will come out profitable, especially in a company which is performing, which has good fundamentals. The company has low interest coverage ratio. The promoter is holding only 21%, so that is a bit of worrying, why the promoter is holding only 21% when the companies are generally supposed to hold at least 25, I think. Contingent liabilities, so this is a little bit of a what is the liabilities. The company might be capitalizing the interest cost, so you should look at the annual report of the company and get an idea of it, of the financials. So now let's move from HDFC to Hero Motocorp, or yep. Our financials will generally be available. So that is, you can always go to the company's main website, and they will generally have a investor relations or an investor section in the website itself, where they will give you access to the company's annual reports, the financial results of the company, so you can look at them and learn about the company's performance. So here let's go to the investors relations, investor information. This is investor presentation. We don't want this. We need should generally be around here. I'm unable to find it right now. After HDFC Bank, we were looking at Hero Motocorp. We didn't look at HDFC Bank's chart though. Let's have a look at that, and we'll move to Hero Motocorp. So it's in the about page. They definitely keep it quite hidden. That's it. Okay, next let's go into the annual report. Okay, we were looking at the weekly chart of the company to see how the company has performed overall. So once we look at the long term, we can use the weekly chart or the monthly, but the weekly seems enough. So we can see it's definitely been in a slow climb upwards. It's been more bullish in the last 5 years, we could say. Yep, it's definitely increased rapidly from 2012 or so. So it's definitely an upward climb for this company. So for the past so many years, few decades, here we